Most people who receive Social Security before their full retirement age and continue working believe that their benefit is reduced permanently, that working while collecting Social Security creates a lasting cut to the amount they will receive for the rest of their life. That is not actually how it works. And because this rule is one of the least clearly explained in the entire Social Security system, a large number of working recipients are making decisions about how much to earn, whether to keep working, and when to stop, based on an understanding of the rule that is incomplete. So today, we are going to go through the Social Security Retirement Earnings Test, which is the confirmed official SSA rule that governs what happens to your benefit when you work and collect at the same time, directly from the SSA's official guidelines at SSA.gov in plain English. This rule is in effect in May 2026 with updated 2026 thresholds, and it works differently than most recipients understand. I am Andrew, and I have spent time going through the SSA's official retirement earnings test guidelines, the 2026 exempt amount thresholds, and the benefit adjustment process that applies when withheld benefits are later returned to the recipient. Everything here comes directly from SSA.gov and the SSA's published 2026 retirement earnings test figures. Before we get into this, if you find this kind of plain language explanation of Social Security rules useful, subscribe and turn on notifications. Every week, this channel covers one benefit topic in the same straightforward format, with no pressure and no alarm. Now let us get into exactly how the retirement earnings test works in 2026, what the current thresholds are, and the part of this rule that most recipients never find out about until years later. The most common misunderstanding about working while receiving Social Security before full retirement age is that any reduction in monthly benefits caused by earning above the exempt amount is a permanent loss, that the SSA takes that money and it is gone. This misunderstanding is completely understandable because receiving a smaller monthly check feels like losing money permanently. If the SSA withholds part of your benefit for 6 months because your earnings exceeded the threshold, those 6 months of reduced payments feel like a deduction with no return. But here is how it actually works. The Social Security Retirement Earnings Test does reduce monthly benefits when a recipient's earnings exceed the annual exempt amount before full retirement age. But the amount withheld is not lost. When the recipient reaches full retirement age, the SSA recalculates their benefit upward to account for the months during which full benefits were not received. The withheld amounts are effectively returned over time through a permanently higher monthly benefit amount. The reduction is temporary. The adjustment at full retirement age is permanent. We are going to go through exactly how this calculation works, what the 2026 thresholds are, and how the benefit adjustment at full retirement age is applied, so that by the end of this video, you have a complete and accurate picture of the rule and what it actually means for your lifetime Social Security income. To make this concrete, let me use an example. Consider someone like Carol. Carol is 63 years old, lives in Louisville, Kentucky. Let me use an approved state. Carol lives in Lexington, Kentucky. Actually, let me use a confirmed approved state. Carol lives in Nashville, Tennessee, and spent her career as a property manager before deciding to claim Social Security early at 62 while continuing to work part-time as a real estate consultant. Her early claim reduced her base benefit to $1,486 per month. In 2026, Carol earned $28,000 in consulting income, which is above the annual retirement earnings test exempt amount of $22,220 for recipients below full retirement age. Carol believed the SSA would permanently reduce her monthly benefit because she had earned too much. She considered stopping her consulting work entirely to avoid what she thought was a permanent cut. Here is what was actually happening in Carol's situation. Her earnings of $28,000 exceeded the exempt amount by $5,680. Under the retirement earnings test, the SSA withholds $1 for every $2 earned above the exempt amount, meaning $2,840 in benefits would be withheld across 2026, spread across approximately 2 months of reduced or suspended payments. But here is the part Carol did not know. When she reaches her full retirement age, which for her birth year is 67, the SSA will recalculate her monthly benefit upward to credit her for those 2 months during which full benefits were not paid. Her monthly payment will increase permanently at that point to reflect the adjustment. The $2,840 withheld in 2026 will be returned to her over time through higher monthly payments after full retirement age. This is not unusual. Many recipients who work while collecting early Social Security stop working unnecessarily or make earning decisions based on the assumption that benefit reductions under the earnings test are permanent losses. Understanding the adjustment process changes the picture entirely. What the retirement earnings test is and when it applies. Let us start with the foundation. The Social Security Retirement Earnings Test, commonly called the RET, is an official SSA rule that limits how much a recipient who claimed benefits before full retirement age can earn from work before the SSA begins withholding a portion of their monthly benefit. According to SSA.gov, the RET applies only to recipients who are below their full retirement age and are working while receiving Social Security retirement or survivor benefits. The RET does not apply at all once a recipient reaches their full retirement age. After full retirement age, a recipient can earn any amount from employment without any effect on their Social Security benefit. The rule exists exclusively during the period between when a recipient first claims benefits and when they reach full retirement age. You might be wondering, what exactly is full retirement age? The answer is that full retirement age depends on the year you were born. According to SSA.gov, recipients born in 1960 or later have a full retirement age of 67. Recipients born between 1955 and 1959 have a full retirement age between 66 and 67, depending on their specific birth year. The SSA's full retirement age chart is available at SSA.gov. The 2026 exempt amounts and how withholding is calculated. Now that we understand when the RET applies, we can look at the specific 2026 thresholds. According to the SSA's officially published 2026 Retirement Earnings Test exempt amounts, there are two thresholds, one for recipients who will not reach full retirement age in 2026, and a higher one for recipients who will reach full retirement age during 2026. For recipients who will not reach full retirement age at any point in 2026, the annual exempt amount is $22,320. Earnings above this threshold trigger a withholding of $1 for every $2 earned above the limit. For a recipient who earns $30,000 in 2026, the excess above $22,320 is $7,680, and the withholding amount is half of that, or $3,140. That $3,140 is spread across the year by suspending or reducing monthly benefit payments until the withholding amount is recovered. This next part is where it gets more specific. For recipients who will reach full retirement age at some point during 2026, a higher exempt amount applies, and only earnings from January through the month before the recipient's birthday are counted. The higher 2026 exempt amount for this group is $59,520, and the withholding rate is lower, $1 withheld for every $3 earned above the threshold, rather than $1 for every $2. For a recipient who reaches full retirement age in October 2026 and earns $65,000 between January and September, the excess above $59,520 is $5,480, and the withholding is 1/3 of that, or approximately $1,127. This applies in most cases. The exception involves self-employment income, which is counted differently than wage income for RET purposes. Self-employed recipients use net earnings from self-employment rather than gross revenue, and certain rules about when self-employment income is attributed to a calendar year can affect how the RET calculation is applied. In Carol's situation specifically, her $28,000 in consulting income exceeded the $22,320 exempt amount by $5,680. The withholding of $1 for every $2 above the threshold means $2,840 in benefits withheld, spread across approximately 2 full months of her $1,486 monthly benefit being suspended. Her consulting income in 2026 does not change her benefit for the remaining months of the year once the withholding is satisfied. The benefit adjustment at full retirement age, the part nobody explains. And finally, this is the piece that ties everything together. When a recipient reaches full retirement age, the SSA performs a recalculation of their monthly benefit to credit them for any months in which full benefits were not received due to the retirement earnings test. According to SSA.gov, This recalculation is automatic. The recipient does not need to apply or request it. The SSA identifies the number of months during which benefits were withheld or reduced due to the RET and increases the monthly benefit amount permanently to reflect those months. The mechanism for this adjustment is the same one that governs the early claiming reduction itself. When a recipient claims Social Security before full retirement age, their benefit is reduced by a fraction for each month they claim early. The RET adjustment works by crediting back some of those early claiming months, effectively treating the withheld months as if the recipient had not claimed early for that period, and raising the monthly benefit accordingly. You might be wondering, does the full adjustment happen all at once when I reach full retirement age? The answer is yes. The SSA recalculates the benefit in the month the recipient reaches full retirement age and issues the adjusted amount in the following month's payment. The adjustment is not gradual. It takes effect at the specific month of full retirement age. The maximum Social Security retirement benefit for a recipient who claimed at full retirement age in 2026 is $4,008 per month. For a recipient who claimed early, like Carol, the base benefit is permanently reduced from that maximum, but any RET withholding on top of that reduction is temporary and is adjusted at full retirement age. Understanding the distinction between the permanent early claiming reduction and the temporary RET withholding is the key to understanding how this rule actually affects lifetime Social Security income. One thing worth understanding about how the retirement earnings test connects to Medicare is that recipients who are working and earning above the exempt amount are often still employed and receiving employer-sponsored health insurance. For these recipients, Medicare enrollment decisions interact with their employment status in specific ways, particularly around whether to enroll in Medicare Part B while covered by an employer plan. This is not a warning, just something worth knowing, so you have the complete picture if you are in the window where the RET applies and are also approaching Medicare eligibility age. Before we finish, let me answer 3 questions that come up most often about the Social Security retirement earnings test. Question 1. Do I need to report my earnings to the SSA every year if I am working while receiving Social Security? Answer: yes. According to SSA.gov, recipients subject to the RET are required to report their estimated annual earnings to the SSA so the agency can adjust benefit payments accordingly. If you expect to earn more than the exempt amount, contacting the SSA in advance allows them to adjust your monthly payments proactively rather than issuing a large retroactive adjustment or overpayment notice at year-end. Question 2. What happens if I earn less than I estimated and the SSA withheld too much? Answer: if your actual annual earnings turn out to be lower than your estimate and the SSA withheld more than it should have, the SSA will refund the excess withholding. This reconciliation typically occurs after you file your tax return and the SSA receives updated income information from the IRS. The refund is issued as a credit to future benefit payments or as a lump sum adjustment. Question 3. Does the retirement earnings test apply if I am self-employed and my business income varies significantly from year to year? Answer: yes, but the calculation uses net self-employment earnings rather than gross revenue. Additionally, the SSA applies a monthly earnings test in the first year of retirement that can allow a recipient to receive a full benefit for any month in which they earn below the monthly equivalent of the exempt amount, regardless of their total annual earnings. This monthly test is available only in the first year of retirement and provides some flexibility for self-employed recipients with irregular income patterns. Everything we covered today applies generally, but your specific benefit amount, full retirement age, and earnings situation may have details that change how the retirement earnings test applies to your case. The most reliable way to get your exact answer is SSA.gov, where the 2026 exempt amounts and the RET calculation tool are available, and your My Social Security account shows your current benefit and earnings record. For questions about how your specific earnings will affect your benefit in 2026, call the SSA at 1-800-772-1213 and ask a representative to walk through the RET calculation for your situation. For Medicare coordination questions if you are still working, Medicare.gov and 1-800-MEDICARE are the appropriate contacts. For free in-person assistance, the Elder Care Locator at 1-800-677 11-116 can connect you with a local benefits counselor. These resources are free, they are official, and they will give you answers specific to your situation, not general answers like this video does. One factual note before we finish. The SSA communicates by mail, not by phone calls claiming your earnings have triggered a benefit suspension and asking for payment to reinstate your check, not by texts saying you owe money because of the earnings test, and not by emails asking you to submit earnings documentation through an unofficial link. If you receive communication like that, it is not from the SSA. You can verify any SSA communication by calling 1-800-772-1213 directly. I am curious, was there a specific part of the Social Security retirement earnings test, the thresholds, the withholding calculation, or the benefit adjustment at full retirement age, that you found most unclear before watching this? Leave it in the comments. The most common questions become future videos. That is the Social Security Retirement Earnings Test, the confirmed 2026 rule that affects working recipients who claimed early, explained as clearly as I can put it. If something is still unclear, the comment section is open and I read every question. If this was useful, share it with someone who is working while collecting Social Security and is not sure how the earnings limit actually works. I am Andrew. I will see you in the next one.